Every year, thousands of foreigner investors wire money into Dubai. They sign contracts on beautiful 3D renders, trust a flashy brochures, and wait. And some of them wait forever. Stalled projects, abandoned towers, deposits that disappear. But here is the truth. That isn't bad luck. These are traps. And they are predictable and they are avoidable. If you are thinking about buying property in Dubai in 2026 or you already have, this video could save you everything. I am Mudit Pandey and this is Pandey Property Wala. For over 15 years, I have guided more than 1,000 families through one of the biggest decisions of their life, investing in opportunities they could not physically see. Study abroad destinations, international institutions, high stake decisions made from thousands miles away. The currency that made it work, absolute trust and hardcore data-driven research. Now I'm bringing that exact same formula to the world of real estate, specifically the Dubai real estate market. And today I want to give you something that most agents, most developers and most influencers will never tell you. The 3 traps that are costing foreign investors millions in Dubai right now. And more importantly, the smart way to protect yourself. Off-plan property. Buying a unit before it is built is one of the most popular ways to invest in Dubai real estate. Low entry price, flexible payment plans, high projected returns. And in the right hands, it works. But here is the truth about what can go wrong. Developers launch a project. They collect deposits. Then the project stalls, construction slows, handover dates are missed by 1 year. Then 2, then indefinitely. This is not theoretical. In market across the region, investors have lost millions, not because the market crashed, but because they chose the wrong developer. So what is the smarter way to vet an off-plan opportunity? First, check the developer's completion record. In Dubai, the Real Estate Regulatory Authority or RERA maintains a registry of developers and projects status. If the developer has a history of delayed or cancelled project, this is your answer. Second, verify the escrow account. By UAE law, off-plan developers must hold buyer's payments in a dedicated escrow account, and funds can only be released as construction milestones are hit. If a developer cannot show you their escrow compliance, walk away. Third, visit completed project first. Talk is cheap. So let me show you what I mean. Before committing to anything, physically assess or commission an independent assessment of their delivered work, not the render, the real thing. The project that looks the most impressive is not always the safest bet. Our job and the philosophy of this channel is to find the assets that are genuinely built on its strength. This one is perhaps the most seductive trap in Dubai real estate investing. You hear it in sales calls, you see it in brochures, guaranteed rental yield of 10%, guaranteed 12%. Your money works while you sleep. Let's be honest. Does that sound too good to be true? Here is what the numbers actually look like when you apply hardcore data-driven research. A developer quotes you a gross rental yield of 10% on a property in an emerging Dubai community. But what they do not tell you is this. Service charges. In Dubai, these average between AED 10 to AED 30 per square foot per year. Depending on the development, on a 1,000 square foot apartment, that alone is AED 10,000 to AED 30,000 annually. Subtract directly from your yield. Property management fee. If you are a foreign investor, you are almost certainly not managing this yourself. A professional management company typically charge 5 to 10% of your annual rental income. Vacancy periods. No property rents 365 days a year. A Dubai realistic vacancy rate is almost 8 to 12%. This is 4 to 6 weeks of zero income. When you subtract all of this from that guaranteed 10%, what you are often left with is net yield of 4 to 6%, which is still good, but it is very different conversation. Our philosophy is simple. We do not accept projected numbers. We model the actual cash flow. That is what separates an investment from a gamble. And if a developer or agent refuses to show you the gross to net breakdown before you sign, that tells you everything you need to know. You find the property, let's say the price is AED 10 lakh, you send the wire transfer and then the invoice start arriving. This is the trap that blindsides the most of the first time buyers in Dubai, and it is entirely avoidable if someone walks you through it before you sign. Here are the costs that your agents may have not mentioned. Dubai land department fee, 4% of the purchase price on a 1 million dirham property, that is AED 40,000, non-negotiable paid at registration. Real estate agency fee typically 2%, another AD 20,000. Mortgage and registration fees 0.25% if you are financing. Admin and transfer fees roughly 85,000 to 88,000. Before you have even moved in, you could be AD 70,000 to AD 80,000 above the sticker price. That is 7 to 8% added to your investment on day one. That matters for two reasons. First, your actual break-even timeline changes significantly. If you need to sell within 2 to 3 years, the transaction cost alone may consume your returns. Second, your liquidity is affected immediately. Many foreign investors underestimate their total capital requirement, and that creates pressure when they cannot afford to wait for the right exit. The smarter way to approach this is to make all-in-one cost acquisition before making any offer, not just the purchase price. Everything. We apply this exact framework to every property we research on this channel, so you always have the full picture. So let me bring this together into something you can actually use. Before committing to anything in Dubai real estate investment in 2026, run these 3 checks. Developer integrity. All their RERA registration number and completion history. How many projects have they delivered on time? What do buyers of their previous projects say? Do not rely on the developer's own marketing material. Check 2. Net yield modeling. Take the quoted rental yield, subtract service charges at the rate specific to that development, subtract a 7.5% management fee, subtract an 8% vacancy allowance. What remains in your real return? If that number still works for your goal, proceed. Check 3. Total acquisition cost audit. Add 4% DLD, 2% agency and 88,000 in admin fees to the purchase price. That is your true entry cost. Size your capital accordingly. This is the framework that protects you. This is what we are here for you, so you never have to make a high stake investment decision blind. We are here to find the asset in high growth areas that offers the best possible returns after the real numbers have been stress tested. The Dubai real estate market in 2026 has genuine opportunity. The fundamentals are strong, the population is growing, the infrastructure pipeline is extraordinary, but the market also has traps, and the investors who got hurt are not under intelligent. They are simply uninformed. This is what this channel exists to fix. If this video give you clarity, subscribe, because every week we are bringing you the research, the framework and the honest analysis you need to invest the smart way. And I have one question for you. Which of these 3 traps was the biggest surprise? Drop your answer in the comments below. I'll be reading every single one. Welcome to Pandey Property Wala. Let's build together.